A fib projection can usually be used in many of the same conditions a fib extension would be applied. Fib projections can be chosen over fib extensions when the distance from a base trend to a clear retracement is too large, and would result in overly wide proportions between fib extension levels. In some cases, a fib projection is used because a new trend begins without retracing yet. If a new trend begins, but there has so far been an absence of clear retracements, it is possible to project fib levels on swing points from the previous trend. That usually has clear swing points prior to its reversal. In this example, we see a common phenomenon of a swing point used from the old trend for the 1 level, which will normally at least line up with an area of flatter price action. In the new trend, if no full or clear swing points have developed retracements yet. Point 1 may also line up with reversal candles and price congestion in the new trend. In fact, the new trend can be entirely irrelevant even when there are clear swing points in its early stages. A fib projection can simply be drawn with point 1 at a clear swing point in the old trend to the reversal point into the new trend. Price action transitioning into a new trend can often be just as influential in projecting fib levels as price action during the development within a new trend. Aligning point 1 with clear swing points or price congestion in the new trend is only an additional layer of validation that is not entirely necessary. A fib retracement can also be used to find more suitable swing points for point 1, as well as possible confluence areas to identify more significant fib projection levels that form closer to fib retracement levels. It is also common to use fib projections from swing points that define the boundaries of flatter range-bound reversal formations, such as a double top. Naturally, this can result in more compressed proportions between the fib projection levels. Starting a fib projection with point 1 at a swing point near a fib retracement level demonstrates how there is a similar phenomenon to fib extensions where increments of 100%, the distance of the base trend, tend to identify potentially stronger areas of opposition that form near retracement levels. This is seen with the 3 level crossing the support base where price drastically reverses into 2009. However, the 2 level still demonstrates how a strong trend can still breach a potentially more significant grouping of fib levels. Watching short-term price action development, such as that of chart patterns in the broader context, is still essential instead of relying on fib levels alone. Sometimes it can be a matter of preference in terms of which sections of price action on a chart will be used for analysis. For example, a double bottom reversal resulting in a clear uptrend with consecutively higher upswings and downswings provides suitable conditions for the use of a fib extension and a fib projection. A fib extension will first base analysis on the initial swing points of this new trend. The 1 level conveniently lines up with current and past downswing points around 2016 in the low 50s to point to the initial base trend distance as an appropriate proportion, since the chart doesn't significantly increase or decrease in terms of the size and frequency of price fluctuations as the uptrend progresses. Given the moderate retracements within the uptrend towards 2017, it would not make sense to use the narrow range of the double bottom for a fib projections base trend. Instead, it would be more suitable to use the same base trend distance as the fib extension. This results in distances not being too wide or too narrow between fib levels. This demonstrates how a fib projection can also use price action from a new trend that can even be the exact same range as a fib extension's base trend. The bullish acceleration after the double bottom completes is not exceedingly steep. Nonetheless, it is not adequately covered by the smaller increments between fib projection levels. Downswings opposing the uptrend do approximate some projection levels, but the overall precision of projection levels at downswings is quite low. A clear and valid fib retracement covers the final section of the previous downtrend. The fib retracement levels run through many clear swing points. The projection levels perform adequately, but there is less precision because price fluctuations are narrower into 2017. Lowering point 1 still produces a valid fib retracement, except this one strikes a balance and captures the most minor to moderate reversals and retracements within the final leg of the downtrend and start of the uptrend. The proportions are more suitable for the minor to moderate price fluctuations that continue towards 2017. The increased coverage of swing points in the retracement ranges below the 1 level carry over to precise fib projection levels above the 1 level. When a trend begins on a steep angle, a suitable retracement for a fib extension can be difficult to find or may not even be present. In this example, the closest thing to a retracement is the minor neutral to bullish phase of 3 methods falling price action. This produces limited results as the trend continues on the same approximate trajectory for most of its duration. The next lower 3 methods falling formation is also not a full retracement and produces even worse results. An even lower 3 methods falling formation produces the best results so far. This is purely by chance in the absence of any clear, complete retracements. In such a case where a new trend begins on a steep angle and doesn't produce any clear and complete retracements, a large fib retracement from the old trend can be a better alternative. As seen before, a fib projection starting with point 1 from a swing point near a large retracement level is another additional route. These techniques produce fib projection levels that are based on the end of the old trend rather than an extension that is based on sections of price action from the new developing trend. As usual, the close proximity of fib retracement and fib projection levels generally points to areas of potentially greater opposition to the trend. There are similar results when point 1 of the fib projection is taken down to the closest upswing point to the next fib retracement level down. Naturally, this extends the distance between projection levels and places different projection levels close to different fib retracement levels. Going back to the technology sector ETF chart used to explain fib extensions, allows for a comparison and contrast to the application of fib projections. The upswings around the 0.236 fib retracement level in early 2018 are volatile. They could be used, but could distort the fib projection slightly. An alternative is to use the stable double top range. This produces limited results due to the increased volatility and bearish acceleration towards the end of 2018. It was best to use the default fib projection levels without any additional levels selected. Since the proportions were narrower between fib levels, even then the volatile downtrend led to less precision even with the 3.618 level in close proximity to a retracement level. The better option in this case was to stay with the closest upswing low to the 0.236 fib retracement level 4.1. This led to wider proportions between fib levels that was suitable for the rapid and sharp price fluctuations towards 2019. Though as expected, the volatile upswings from 2018 did produce distortion and imprecision with the identification of levels that would likely oppose the downtrend. During the uptrend reversal from late 2018 to early 2019, there was a sharp early retracement for a fib extension to reference. However, that would result in narrow proportions not suitable for the steepening uptrend. A wider base trend for a fib projection from the end of the downtrend produced wider proportions, but the results were quite imprecise due to the greater volatility still present at the end of the downtrend. Interestingly, there is slightly better performance, most noticeable at the 2 and 3.618 levels. This is a less common occurrence, but does happen occasionally. A fib projection using the first up and downswing points was a bad choice from the start of a steep trend in development with its compressed proportions. If price action from the new uptrend was chosen, a fib extension was the better option using a larger base trend up to later retracements. If the use of a fib projection was preferred with the old downtrend, covering the entire range of the double top reversal was the best option for the best projection levels. This allowed for stable price action from the top of the double top 4.1 and larger proportions for fib projection levels as the new uptrend began to accelerate.